Hi guys, this is Dr. Sadasivam once again. Yesterday I had put up a video clearly showing that the war in Ukraine and Russia has got nothing to do with the balance sheet of a software company in the United States of America. We all agree that the world is totally interconnected and events happening at one part of the globe, they indirectly affect the stock markets in various parts of the globe, be it your Nifty, your Singapore, SGX Nifty, or your FTSE, or your Dow Jones, they have an effect. But what we discussed in the earlier video was that is the effect so severe that the value of a particular stock jumps up by 10%, 15%. Is it so significant? That was what we talked, and we used a snake analogy. Do watch that video. We are putting that the link in that description column today. And today we are going to talk about the same analogy of a snake and the stock market. Many a times what happens is people go through YouTube videos, understand the concepts of what a call is, what a put is from a theoretical standpoint. They also learn various strategies like short strangle, short straddle, iron condor. A lot of such strategies are available in the market, and they learn all those strategies, and without proper guidance and training, they jump into the stock market and start investing. And some of these people invest heavily, right? Guys, let me tell you a great warning. And this warning is, the more a person starts earning during the initial periods, the more this guy loses heavily. Because that initial winning gives them a confidence, some kind of duplicate confidence, a newfound confidence, a decoy kind of a confidence. And that confidence propels them to take greater risks. And someday, when there is a black swan event is suddenly the market jumps or it comes down based on some news. Of course, black swan event is one extreme, happens once in a year or once in 2 years. We're talking about even the normal stock market movements, guys. Some days the stock market moves up by say 150, 200 points. Not very unusual. 200 points movement in a stock in a day is not very unusual. Though every day it doesn't happen, but it's not very unusual. I'm typically talking about option sellers and option buyers. I'm not talking about the normal equity guys, because someday when it goes up, it will come down. The volatility is there, but it's not as risky as an option market, because in an option market, the money involved is too less, but the volatility is too huge. For example, today if Reliance is selling for 2,600 rupees, the Reliance is not going to become double, right? From 2,600 to 5,200, or it's not going to come down to 1,300 in 1 or 2 days. It will take its own time, right? But guys, those of you who know options, the option at 20 rupee option can become a 100 rupee premium option. In that case, a person doubles his makes his money 5 times in a day. But at the same time, the whole option market is a zero-sum game. Let me tell you that. It's a zero-sum game. If one guy is making money, some guy at some end of the spectrum is losing money, right? So a profit of X is the loss of some other person. Why? You won't know who that guy is. Unlike in a normal contract or in a house buying or a selling, you know who the buyer and seller is. But in case of an option, it's all put up in the exchange. It's a complete tech operation, and you won't even get to know who is buying and who is buying it from whom. That's not what is the consideration. The consideration is at what price it is sold and at what price it is bought. So those in the stock market, options market, you understand these things very well. Now, coming to the main point, we were talking about the snake analogy. Guys, let me tell you that If you go through a YouTube video in terms of how to catch a snake, not very difficult. If you ask a snake catcher how he catches the snake, he says nothing big. He's got a snake tongue, that's called as a snake tongue, and you catch the snake by the tail. Nothing happens, because the only dangerous portion of a snake is its teeth, which is in the front portion, right? Everywhere in the body, it's not poisonous at all. But can you hold it? Nobody can, because there is a fear. Always snake means fear. But if you look at it, catching the snake is not very difficult. You catch the tail of the snake, and you have a tongue in your hand, and you can always control the snake. You can stop, at least when it is coming towards you, you can stop it. But it's not easy, because the ferociousness of the snake is what makes it dangerous. The ferociousness, the speed at which it springs and comes to you is what is a real problem. And that's what the option market does, guys. In an option market, like we discussed, a stock, for example, like we talked about Reliance, from 2600, it can't jump to 5200. But in the option market, the premiums double, triple. One candle is sufficient for the premiums to go up by 2 times and 3 times. So which literally means you have lost 3 times your money, what you have invested. That's what it typically, if you are an option seller, and if you have sold an option for 10 rupees, and if that option price increases to 30 rupees, you have lost 3 times of your money. Much in the same manner, if somebody can handle this market well, they can earn 3 times too. The risk is too high. And this is exactly what we are saying. If you see a snake catcher catching a snake, things seem to be too easy. He's catching one end of the tail, and he's using the tongue to catch the snake from the other side. Very easy operation. But if you get to do that, you are sure to be bitten. And that's what happens in the stock options market. Because we come across lots and lots of videos of people saying that I made 1 lakh into 2 crores or 1 lakh into 10 crores. Yes, maybe they're not lying. They're speaking the truth. But it requires rigorous training. Very, very important. Like, we don't jump into the swimming pool without learning swimming, right? Much in the same manner, before you guys, any guy enters the stock market, it's not just enough you understand the theory, or you learn a little bit about what is open interest, what is implied volatility, what is VIX, little bit of call option, put option, you know the fundamentals, do paper trading for 2 or 3 days, and people get that overconfidence, they start investing lakhs and lakhs. As Nitin Kamath of Zerodha said, that 99% of the people fail to even get bank returns, earn bank returns, savings bank returns from their investments, right? It's a serious game, guys. The opportunity is a lot of room to make money, but one needs to be very, very careful, and you have to tread very, very carefully, right? Okay, guys, I hope you like this video. We're coming up with lots and lots of videos like this. We're coming out with a separate channel. We will announce you at the right time. Thank you very much, and this is Dr. Sadasivam signing off till we meet again. Bye bye. Jai Hind.